Hello, ladies and gentlemen. Welcome to the next video for 5KP program. It's Adam speaking. It's Tuesday, 22nd of June, 2021, and I'm broadcasting from Białystok, Poland. I'm actually not really in Białystok, but very close to it. Doesn't matter. What's important is I'm in Poland, my home country, and I can immediately start this video by telling you how different this place is from the places that I've been traveling to in the past few months. And I'm comparing here Poland to Colombia, to Ecuador, and to Spain. And I must tell you guys, the difference is huge. So yesterday I had an absolute shock when I went with my sister and I could actually enter into a store, like supermarket or something like this, without a mask, and my temperature was not checked. And nobody had a problem with that. That was strange to me. And honestly, I feel really well here, really good. Seems like freedom didn't leave Poland yet. Hopefully it will stay this way. Obviously, I'm a little bit pessimistic when it comes to these things because I've seen what was happening in Colombia, or what was happening in Ecuador. Actually, it's still happening there and in Spain. And I hope that Poland will remain a country of freedom for the next years and so on, and Europe protects itself from some insane rules, because it felt amazing. It felt amazing, guys. I could breathe air. So just a short entry here with my positive feelings. And when it comes to our portfolio and trading, so we had a little bit of a problem and troubles in our portfolio in the last week, because something happened to gold. The price dropped down suddenly, like as it always happens with gold, you know, in certain periods of time. This was actually quite predictable that it will happen. So I was prepared for that. However, the portfolio in our trading account was not as great as I thought it will handle this thing, and maybe I underestimated it. So I will show you what's happening in there, and we will discuss today a couple interesting topics, and I'm going to move there right now. Just before we go to the portfolio and to the agenda for today, remember that this video is for informational education purposes only, and I keep saying this and talking about this, that I'm not giving any advices, because markets are crazy. It's a risky place. So when things go up, everybody's happy. But what if they reverse? Then nobody has a crystal ball. That's why I put all this disclaimer here, to remind you guys that this is here just for education, and please don't blame me if things don't run the way it was expected. We live in the real world, right? So things happen. And so having said that, let's move on to the agenda, and we're going to talk today about portfolio performance, as always. So you see that we dropped, from our 9.5k almost, we dropped to 8.2 because of that drop in silver and gold. It's kind of expected. I didn't change my positions much, and that does not mean that this loss here will be permanent. That's how it looks like right now. But remember, we didn't exit our positions yet. I'll give you the reason why, and so that means we still remain in the game, and there is a potential for reversal. And we'll look at the gold charts very soon, and silver chart as well. And you will see why I didn't just immediately close all the positions and exit everything and take that loss, basically by making it realized and coming back to cash. We're going to talk about one trade which went pretty bad. That's VIAC, and how I'm recovering from this. And then actually for my students, so this is going to be for YouTubers, for my students, we're going to talk about what to do not to panic when things go wrong. So it's a little reminder. I think a couple of months ago I've been talking about this, and this kind of refers to markets going down, when they drop and it destroys your portfolio. But since our portfolio was mostly relating to gold, okay, what to do not to panic when gold crashes. We'll do some portfolio management, and then I will talk about the power of cash flow trading and not over investing, and we will look into the dangers of margin calls and talk a little bit about margin calls actually, and make sense of some numbers there in Think or Swim. Finally, because everything was just running so smoothly and so on, we had some situation where things reversed. and got us into trouble, but these are the moments where we are getting educated the most. So I'm taking this as an opportunity to teach you something and actually, share some know-how there and how I handle this kind of things. So let's move on, and before I jump into the portfolio, let's look at the situation which I was talking about with gold. So this is gold futures, GC, that's the symbol. When you're using TradingView, you can go find this. If we look at the gold from wider, longer perspective, I bring the weekly, you can make sense of some of these lines that I drew here. So look at this, I drew this arc, this massive arc around, this is weekly going from 2011, so 10 years chart more or less. And what you see here is that we had this reversal, created this sort of a cup. Actually, some people would draw it a little bit differently. I was just connecting the lower points here on the on this arc, but some people probably would draw this arc a little bit more aggressively to create a cup and handle, situation. Something like this, maybe like this. I don't know. You could probably do it in many ways. And we had this handle thing happening here, and you can see that if you draw it like this, you see clearly a long-term cup and handle reversal. What it usually means is that this thing is just going to the moon. And did something change? Not really. We had a breakout here in this situation. When I come back into the daily, and that will zoom in a little bit, you see more of this flag here, and on the pole, more or less long-term pole, we had a breakout of this handle part going down. However, it kind of dropped into this channel back, and the situation from last week, what happened here, if I zoom in, was this massive sell-off from basically 1900s down to 1784, so a massive sell-off. Okay, that's like over 120 points down on futures, but it caught this resistance here. Okay, it caught this resistance level of that channel and kind of bounced now. So I don't know if this thing can go now a couple ways. It could either bounce and we can experience comeback of the gold, or it can continue and break through the resistance and continue going down into that channel. Next kind of support level is probably 1700s, maybe 1675 is more realistic here. Could probably break through here, and then some shit could happen in here. But definitely staying in this channel. I don't know how long it will stay, waiting for some sort of explosion here. And why? Because fundamentally nothing has changed in the economy, in the US, in the world. There is reopenings, of the economies, and people start to travel, we have holidays, and so on. People start, spending their money on, I don't know, some trips, and, travel a bit more, and, buy more stuff, be happy, especially in Europe or in the US, summertime. But fundamentally, nothing really has changed. Fed is still printing currency, creating new digits. We still have restrictions, we still have the situation with the pandemic. Well, it didn't go away nowhere. We didn't have some magical differences into, something magical happened and now we just fully recovered and now everything is going to be great. Gold, on one hand, it's a beautiful precious metal, but on the other, of course, it is a monetary metal, meaning that it is money. All right, so why would people be buying gold? Why would people be going into the gold? Well, because they believe that this money is better than US dollar. If you're printing a lot of US dollar, okay, and you can just create it out of thin air, there's no doubt that gold is a better, is a better asset in terms of, what it is. It's better money, or true money. So why would people be buying gold? Well, when they're afraid that something happens to the currency, which is actually right now mostly used or used by the government currency. So to protect themselves from stuff like hyperinflation or simply decreasing value of the currency that they put on their account. So this kind of move may suggest that they believe that it makes no sense, right? Of course, we all know that markets are manipulated and there can be a lot of things going on there. Banksters don't really want us to believe that now gold's gonna explode, and they don't want to replace their fantastic paper currency, fiat currency, with gold. So they don't want to create some sort of situation where people stop believing in the digits that they create. And there can be some manipulation there going on. We don't know, we can prove it and so on, but just keep that in your mind, that fundamentally nothing changed, so there is still case for gold. And if it's dropping like this, well, there is many factors, but fundamentally nothing changed. So if you believe that something is really happening to the dollar, something is happening to other currencies in the world, and you can replace that with the currency or money, with real money, and that's a good idea, well, fundamentally nothing has changed for you after that week. So that's a couple words here to mention this, what that basically describing my bias here. So when I saw this, I was thinking, all right, that was predictable. Now question is where it's gonna go. I'm not getting out of gold though. I may treat this as an opportunity to buy more. Just waiting maybe for some bottom, yeah? Is this the bottom? I don't know. It's probably gonna take some time to figure this out. When it's gonna come, if it bounces, like I told you, it may start coming back up, may move sideways a little bit or remain in the channel. We will see. None of that, changes my opinion about gold or gold mining stocks. So I'm just gonna be remaining bullish. Nothing fundamentally changed for me in this situation. Just need to be trading more carefully and manage my currency a little bit better on the account, because you will see why. So that's the case for gold, and I'm gonna show you some other thing here about gold. So we see that it's trading currently 1784 on the futures market. It's a little bit delayed, but it doesn't matter. Futures are trading basically 24/7 COMEX. Remember this number, 1784, right? Now, however, if I just want to go and buy some coins, this price per ounce, right? If I want to buy this stuff, I want that gold for this price. If I go and want to have the physical thing. So if I do that, I'm gonna go to a dealer here, the goldsilver, for example, .com, and I want 1 ounce. How much do I need to pay? 2K. Okay, so this is too expensive. How about Buffalo? Okay, 1.9, almost 2K. What's the cheapest? Oh, there is Australian kangaroo, 1920 bucks. That's like 200 bucks more. Okay, maybe less than 200, but 100 something bucks more than the spot price. So you can see that there is already a little difference between gold that is, traded here on COMEX, the spot price of the paper gold, versus the gold that you can hold in your hand. So just keeping in mind that this difference is there, and these traders who are trading the real thing, are not really spooked off by this. They have the demand, nothing changes there, and this is really crazy. So how about the market? The market has been going sideways like crazy. We had a little correction here, and you see it's just been moving sideways. Nothing happened. We're trading 420 and 4,218 basically on the futures. Just moving sideways, correcting, staying in the channel. I mean, very predictable. Probably is going to go up again. Just create more currency, more liquidity, more buying. I don't see this thing crashing anytime soon, although it should. Yeah, so we'll talk about this situation, what to do when this thing actually starts correcting, because we experienced some problems with, challenges with our little gold crash in our portfolio. So what to do, I have a list for my students. We're going to talk about this a bit later. So that's just the intro to this. Also some news, guys. This is really cool. Like oil could spike above 100. I wanted to show you this because I've been talking about this for long time, that Fed and the powers running this world, they will try to hide inflation, which is spiking now like crazy. They will hide it in the price of oil, and they say oil could spike, like Bank of America says this, oil could spike above 100 next year. Now it's trading around 70. So if we go back to the chart, crude oil 72.65. Look at the chart. That's futures. It's barrel. Look at this chart. That's just going crazy. So we're printing more currency. Okay, prices of things go up. Well, price of oil needs to go up to justify these prices. So very simple logic out there to justify this, and now it's being confirmed by the CNBC here report from Bank of America saying this kind of stuff. So if they say that, well, that's very interesting. Okay, and we've been talking about this for for a while. Also, coming back to the inflation, I found a little website, I was searching for alternative inflation charts because I don't believe the CPIs from these days. And they're here using the numbers of or basically measure techniques from 1990s here, showing what the inflation would be if it was alternative 1990s based. So we will be above 8% now, guys. That's pretty crazy, okay? Consumer inflation, official versus shadow stats, okay? So pretty crazy, okay? Crazy numbers. Like right now we have a reported 4.8, which is anyway really crazy. So yeah, just search for some numbers. You will see that what government is telling us is maybe not necessarily true. I'm going to hide that one. Okay, we're going to talk about a margin a little bit later, but now let's just jump in to our portfolio and see what's going on in there. The market is closed right now because I'm in Poland, and it's going to open in 2 hours more or less, or one and a half hours, something like this. I wanted to record this because anyway, whether it opens or not, we're not going to be doing too much in this portfolio. I'm okay to trade, but you see that my account status changed and it says closing only, and I have quite a lot here. Well, I mean, bad information, let's say, telling me dollars to liquidation 1,500, and this has something to do with margin call and my option buying power going into the negative numbers, and that's related to gold price dropping, silver price dropping. Okay, so I ran into kind of like crazy situation with this portfolio we didn't run into before, but I think it's a very nice lesson to learn, because it's a warning sign that you should not overinvest a little bit and be careful with the margin. And I'm going to talk about this margin a little bit later. So you see, we moved down to 8.2K, so that's the status. We are invested in silver, gold, uranium, more silver, more gold, and more uranium here, and we have some storage of our savings in PSLV, so 200 shares, some insurance here, which maybe is not really working well because market didn't crash, gold crashed, so maybe I invested into wrong type of an insurance here. I should be investing more into insurance of commodities, but I also believe that if the market really starts crashing, SPY, that's why I have this here, if SPY starts going down, it will drag down also these companies. Okay, why? Because of margin calls, which we're going to cover a little bit today. Okay, so we have some of these companies. One speculative trade here on VIAC and also T-Mobile. Not T-Mobile, we're talking AT&T. And we're going to talk about this as well. Now, however, guys, because that's what I mentioned here, we will talk a little bit about recovering from that trade of VIAC, and that's the last trade. So you see we have lots of losses. So if I look at the PL open, overall with negative 1.1K, okay, and that comes from a couple positions, and that's related to this drop of gold recently. Pretty bad loss here on AG, okay. Then we have like a significant loss on FSM, so Fortuna Silver, so silver, another KGC gold, okay, next gen here, that's uranium. Okay, that I don't care. SPY, that's our insurance, and VGODF, I think, no, that's not this one, that's VIAC. Okay, that's VIAC. That's our loss about which one we're going to be talking about. So we have quite some significant losses, and VIAC is one of them. 157 loss. What to do with this trade? Why didn't it go the way? What was the plan? Why didn't it go the way it should? And also, what am I going to do about it? So first of all, what is this trade? So we have a one bullish call, which we bought at strike price level 42.5. It's valid till 16th of July, so we still have 24 days in it, okay? And I have 3 days till expiry, a short call position also at the same level, okay? 42.5. This is already an adjustment, okay, which I've done. This is an adjusting trade. In the beginning, I just had a call because I was very bullish on VIAC, or bullish on VIAC. I thought that I can actually see this price go up and then do some other adjustments to it. However, the price did not go up. It moved down to around 41 right now, somewhere there. It went even below. I think it was in the 30s. Now it's like 41. So it's kind of recovering now, feeling some all-time gaps, but I don't have many days in there. So I paid for this $260 minus contracts which I've been selling already for a while. So if I just look at the history, I think I should see some account statement and just filter by VIAC and search my trade history, not on cash vehicle history, 3 orders, 3 fills. I see that what did I do? Aha, there is a position which expired 18th of June. That brings me some premium here, 22 bucks. Okay, then I had a call which expired also 0.6 bucks. And now I have additional one, 25 bucks. So I'm reducing the cost of this trade already quite significantly, but still it looks like I'm having a loss. Maybe if I could bring this first to analyze that, it would be very interesting to look at. So if I go to the risk profile and describe this position on VIAC, where we're sitting and what's going on, if I just had my one call here, this is where I will be sitting. I will be sitting at the loss of $163, okay? But because I shorted this 25 June, 42.5 calls, I'm in a little bit different position right now. I'm losing 157 with possibility to go 150 if we stay in this place. If this trade starts recovering, you know, my losses, if you watch this box here, watch the blue line, and blue numbers, my losses can recover to as little as 85 bucks just from this. I have 24 days for this. Time is working good for me now, so it's ticking positively. But I want to also bring the old trades in here so you can see the full picture of this situation. Not trade, account statement. What was the previous trade? This was this one, so let's analyze that as well. Okay, it says not traded. I need to bring these numbers. So what did we have? 22. Okay, so this trade was at 22. Can we? Okay, it says not traded. I cannot really put the number here. That sucks. Let's change the date then. I'm going to change for something. Just put 22 in here. August. Can I do this? Not traded. What else? Weeklies. Can I trade weeklies? Not traded. Just cheating it a little bit. I don't know, September's not traded. Okay, you would have to imagine that I'm doing some sort of a, yeah, I wanted to show the full picture, so the 22 bucks plus to this, and then the other thing, but I think that it will not allow me, so it's okay. You just have to imagine this, that this trade is a little bit different. The risk profile is a little bit different than what you see by the numbers that were, you know, the trades that expired already. So 22 bucks. Plus this 6 bucks in here, okay, I don't know, 18 bucks actually, because it was a short spread. Yeah, so 18 bucks, 22 bucks, that's basically 40 bucks less than what we see right now. So the loss is already being reduced. What's the plan with this? All right, so if we look at the chart, okay, and I'm going to look at the VIAC, what happened here was, I was thinking that, you know, VIAC is going to, after this longer consolidation, it's going to break out. I was around here. It's going to break out and just go and reach some higher numbers here, coming back to fill all this gap, fill all this selling, because fundamentally nothing really crazy happened to the company. We've been trading about 200-day moving average. We had some breakout here going from, you know, the 20-day moving average broke away from the 50. You know, it started moving up. I thought, okay, it's going to continue. It's just going to start and do something bullish for us. Probably longer term. So what I mean by doing something bullish is, you know, just take a ride back up. However, it didn't. Yeah. So what happened here was actually we experienced some sort of a drop. The 20 crossed the 50 again and drop, sit down on the 200, bounce back up, and it seems just like it's going to continue moving sideways for me. Yeah. So that's not what I wanted. That's not what the plan was. My plan was to go up. Okay. Not drop. Go up, not the sideways, okay? I didn't want the sideways trade. So my trade just didn't work. So how can I recover from this? And the idea was, okay, instead of just simply sitting on this 42.5 call and just waiting this 24 days for it to recover and have a negative 3 bucks of theta, how about, you know, just neutralizing this trade and getting out with the loss? But since I don't see VIAC to drop very far below 200-day moving average, which is around 39.20, you know, I can use some strategy which can, you know, keep me in the trade for a while, but at the same time reduce my losses. And that strategy is simply selling calls. So shorter term calls, and that's why you see this 3-day to expiry call in here with a really nice premium 25. It's very close to where we are right now with the price, and therefore it's bringing this this currency in. But you can imagine what happens if VIAC reaches this level in the 3 days. Okay, 42.5, it gets there. Okay, 42.5. My loss is $86 on overall on this trade. Okay, that's almost full recovery, taking into account my previous trades, which expired already. I will probably around 40s of a loss. What happens if in 3 days this trade, this price of the VIAC does not get to this level? Well, then I'm going to keep my $25. This is going to expire, and I'm going to sell another call contract at the same price level to bring enough premium to reduce the cost of that trade for another, I don't know, 7 days and so on. So I'm going to wait with this thing for 3 days, see what happens. Of course, I'm going to watch if my VIAC doesn't drop below the 200-day moving average and keeps going. That then means to me I really need to exit, take my loss. But if it doesn't, if it moves sideways, I'm going to keep selling these calls. This it's almost like covered call, right? Positions, because I'm owning one longer term contract and for which I'm selling kind of covered call for 3 days. I'm going to watch those, let them expire, and just keep bringing the cost of this bullish trade down and down and down until I get to zero. And that can be easily done within the next 24 days. So if you look at the prices of the VIAC contracts, the 42 level calls, let's go in there, see how many options you have. So when this expires, I will have 7 days contract till 2nd of July. And if I promise 42.5, I will be also getting something like 50s, probably maybe less, F40s. So I can reduce this cost by another 40. If I see the recovery happening, I mean, maybe I get called out, but maybe it will expire again at the level of maybe 42. Fantastic. I can sell a call now at the level of 43, and so on and so on. I can bring this, like by selling all these calls over time, I can bring this trade to basically zero cost. Okay, so that's how I recover from this. I already said to you guys, this is a trade which didn't go well. That was not the plan. The plan was for this to go up, and I could sell this call with a profit, or I actually convert it to vertical spread. Didn't happen. Now I'm in recovery mode, and that's why I'm going to keep selling calls shorter term to bring premium to reduce the cost of this long-term trade. That's it, guys. So that's how you can manage a position which didn't go well. That's why we also buy long call contracts for a longer period of time, because then we can use this technique to get out and basically reduce the cost of ownership of that long call. So longer term trades, you can do this technique. If you don't have much time, you're very limited, right? And you have to get out and take the full loss. So that's a lesson for you guys from this. And now I'm going to move on to the part for my students.